So the World Bank is forecasting that 2024 is going to be a slow year for the third consecutive year in a row. Now, after COVID, the markets were on an uphill trajectory. So 2018, 2019, but not so much 2018, 2019 for sure. 2020 and 2021 year were bull years for the stock market across the globe, not just in the US, not just in the UK, all across the globe. So those 3 years were amazing for the stock market. Okay, I believe the markets in the UK grew about 45-50 odd percent across the overall 3 years. The US was like something 60-65% across the 3 years. So annualized it's coming up to like 20% or something. So those were the bull years. Now 2022 wasn't that great of a year in terms of market growth, and 2023 was also a quite bearish year as well for the markets overall. It wasn't that great a year for stock market investments. Now what's happening is the growth has hampered across the globe. Why that is so is because of the Russia-Ukraine crisis. It's because of the Hamas and Palestine and Israel war, for example. It's because of the growth slowdown in China. It's also because of the numbers that are coming out from China. It's also because of the numbers that are coming out from the US. It's also because of the numbers that are coming out from the UK as well. Now, 2008, 2009 were years for those 2 years. There was a global financial downturn across the globe. Yes. And then we had this 1990s Asian market crisis. We had the downturns in the early 2000s, dot-com bubble and all that. But 2020, when the market dipped about 60% and then went up again, that shot up. So that growth, I've seen the market drop like 30-40%, and then they went up to as high as 60% in those 3 years, as I mentioned. Those were the years, but markets work in such a way. Markets are systemic in a way, so they don't necessarily work just because what the numbers are saying or just because what the technical analysis is. It's also due to a lot of multiple factors, such as the human consensus. It's also because of the fundamentals as well, what's happening. So the growth overall has slowed down in the world is because people are not spending as much on luxury spend. People are not spending as much on extras. Basically, the cost of living crisis is such that people are not spending so much money, so there's a lack of circulation of money in the economy, which is why less money is being pumped into the economy. Therefore, less circulation, higher inflation for sure. Higher inflation, not just in the UK, not just in the US, also in the Asian markets. Therefore, people just don't have enough money to spend, which is why they're not able to spend so much, which is why the markets are slowing down, which is why the overall growth is slowing down. The tech sector is suffering in the US. You hear it all the time. Certain companies in the US are constantly laying off 15,000, 20,000 employees. Then we have the tech sector slow down in the UK as well. Not so many startups are incorporating in the UK, therefore a lot of companies are not willing to take the risk. A lot of people are not willing to take the risk to grow and expand their businesses. And then the VC and the private equity funds have dried down as well. So gone are those days when you would have money coming from all these major VC and private equity firms throwing away 100,000, 200,000, a million, $2 million, $5 million, pounds, whatever, just on companies to incorporate and grow and scale. Those days are gone now. We have companies that are struggling to get the financing required to grow their company to scale. So funding is dying down, which is why growth is also hampering, because there's not enough money there in the world for innovation. There's not enough money for ideas to be formed and to be scaled up. Thank you so much.